Hello, everyone, and welcome back to Sudden Wealth. Hope you guys are having a very good week. Hope you guys are preparing for the weekend. If you do enjoy the content, please consider dropping that like and subscribe. And thank you very much for your support. So, quick update: job reports in the US came stronger than expected, much stronger actually. So obviously you have the immediate classic effect of yields shoot up, bonds go down, stocks come down as the likelihood of rate cuts decreases. That's pretty much what happens. Now, I think that this is going to be the case, meaning this course of action that I just said, until you have inflation going down at the same time. So if you think about it, if you have low inflation, so the issue is not just the rate cuts don't come, is that inflationary pressures will continue. So CPI readings basically will be higher than what they are right now. That's the idea. But if you actually have a strong job report, notice that I didn't say market, I said report, together with a couple of bits on the inflation side, this is actually something quite nice if you think about it. That means that inflation is cooling off, but not at the expense of the job market. Actually, you just have more stuff, which lowers the cost of everything. So let's hope that that's what Trump manages to pull off. So today's going to be quite the day in terms of content. First of all, I would like to answer 3 questions from people in my comment section. There's a person, I forgot his or her name. He will know. He was pushing back a little bit at me, but very respectfully. I had Mustafa also asking me a question, and there was another person asking me about if they would jump now into the market, would they wait, would they put their money in the market, blah, blah, blah. So this is it. I've made a video with my 12 predictions for 2025. And based on that, I think it's very clear what I think that the market is moving. Can I tell you what to do with your money? No, because if I do that, then this channel becomes something else. Then I need to go get a license to be a financial advisor. I need to go set up an office, pay taxes, charge you for money, and basically draw you up a financial plan, which I can do. I like what I do with my in the crypto space is I try to look for narratives. I try to look for things that people usually don't like, not paying attention, things which are cheap, and things that, particularly if they are down 90 or 95%, I like them the most, and then try to make it work from there. This is what I do, and I don't get too much concerned with, oh my god, this is gonna be January 14, January 12, January 16 in the afternoon. No. I'm prepared to see a lot of red for a while, if that's the case. But once again, I cannot tell you what to do, because when you're asking me questions about your money, about your investments, that's very specific. And this channel is not the purpose of this channel. You have a lot of channels that will tell you that, or they will, throw you into a Discord where you pay huge amounts of fees, and they will tell you all of that, but not just publicly on YouTube. Then number 2, Mustafa was asking me about if I changed my mind about the predictions, and no, my opinion has been the same. So I'm actually starting to regret a little bit making that 12 prediction video, but I'll try to do this again. I have 4 predictions on the top, which are by far the most important. And then I have 8 predictions on the bottom, which are much less important. What does that mean? That means that if I get these 4 correct, or even 3.5, let's say, but I get everything else wrong, I'm extremely happy. If I get the bottom 8 all correct, but I miss the top 4, I'm going to be really pissed off. So let me give you this example. If I think that Bitcoin is going to top in late September, early October 2025, and let's say that already peaked right now, and basically it's down forever from here, but by the end of the year, TLT is above 100 or the dollar is below 98. Do you think I care that the dollar is below 98 if I got the Bitcoin part wrong? No. Now the other way around. What if everything happens as I predicted? So you have a first pump into March, April, then a sell-off, and then the final pump into August, September, and October. Do you think, and then to November, etc. Do you think let's say that I get that part wrong, but the Dixie is 97, which is the dollar index, on December 31st, 2025. Do you think I'm going to be ecstatic and super happy? No. That's my point. So, for example, when I predicted back in March 2024, these things have degrees of importance. So, for example, in March of 2024, when Bitcoin was above 70 and everybody was calling for 100, and I say, I think Bitcoin's going to go to somewhere between 47, 52. And I was saying that for days and days and days, and then Bitcoin hits 48K in August 5th. And then I come and I make a live stream and I say, today is the bottom for Bitcoin, while everybody else was predicting Bitcoin 30K, 28K, 22K, you pick your poison. And I said, no, this is the bottom, and most likely it's going to be the last time we're going to see Bitcoin with a 40,000 handle in history. Do you think that's more important or to understand this? Or Ethereum, instead of hitting 5K in mid-January, it hits end of February? What do you think is more important? That's my point. So I can live well. So let's say that Ethereum is 20K by September. Do you think it really matters that it wasn't 5K by mid-January? No. Does it mean that I was wrong? Yes, it still means that I was wrong. And I will still say here, when it's 15 or 16 of January, and if Ethereum, as I expect, will not be above 5K, I'll come here and I say, I was wrong. Prediction number 8, I think it was number 12. Take it out. That one was wrong. No problem with it. So what have I said since almost I started my channel? If Trump wins, I think we're going to have a 2017 style of cycle. If she wins, I think we're going to have a 2021 style of cycle. I've said this 100 times or more. What's happening right now? Bitcoin has been correcting for part of the month of January, just like 2017. Trump will be president, just like 2017. Interest rates are higher, just like 2017, although at a lower degree. The dollar is very high, just like in 2017. People are afraid of inflationary pressures from the tariffs, just like in 2017. Trump is saying we need a lower dollar and lower interest rates, just like in 2017. So far, it has been just like 2017. The only thing that is happening a little bit worse is Ethereum's performance. You see, Ethereum connects all the rest of the altcoins. Can you have pockets of altcoins, a couple of them, that do very, very well? Sure. I've done more than 100x in a few coins, as you guys know. But is it the majority? No. What I'm saying with the real altcoin season is when you see basically almost everything going up, it's actually going to be hard to find something going down. That's my point. That's the difference. And my expectation is that we have a similar cycle to 2017. And my prediction is that we pump into March, April, we sell off, and then we make the final pump into late September, first half of October, maybe 20th of October. And that's the top. We sell off after that. We still make a rally in November, but we don't make a new all-time high. But it seems like it, but we don't make it. And then we sell off and we have a bear market. That's my expectation. And then I've also said before, altcoins, you push a month or so forward. So if Bitcoin peaks in October, altcoins will probably peak November, late November. Will you still find a coin peaking in January 2026? Yes. Most likely, yes. But it's not going to be the majority anymore, in my opinion. And I also said there's a large number of altcoins that peak 12 months after the Bitcoin halving. That would be April 19. Not all of them, but a considerable number of them. How will you know which ones? You don't. For example, my strategy is this. If I'm up 1,000-fold in Andy, let's say, or 800-fold in Andy by April, probably I will trim that one more than the other ones. See what I mean? So it will depend on the status of my portfolio. But my prediction regarding Trump has been unchanged. And so far, it has been accurate. The cycle looks very much alike, even the macro feelings that we've seen in 2017. Oh, he's creating volatility because he's annoying his allies as well as his enemies. Just like 2017. There's really very little difference. I know that 2017 sounds like a long time ago because we had a zombie virus in the middle, right? People forget. This year will be 6 years since the first news about the zombie virus. Think about it. 6 years. That's more than half a decade. Then the other pushback, which actually reminds me of something important, was basically, you were wrong about Ethereum, and these things you cannot really predict. Crypto is very speculative. The S&P 500 serves me better, etc. By the way, please don't arrest this person. He's been extremely respectful, and I appreciate the pushback. Like if he was saying something like, "You were just trying to live off your fans," blah, 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 then that kind of stuff pisses me off. Because since I don't sell you anything, see what I mean? Or if he would be insulting my family, your wife is then I would get pissed off. But he has done nothing of that, so please don't harass him. And he was saying this. Now, I used to be a stocks guy as well. The thing is, something happened in 2008, and once you understand this, it changes your perspective completely. Now, I've covered this in previous videos, but I mean, I make a lot of videos, right? So people don't want, and I have new followers all the time, so I hope you can bear with me. So 2008 was poising to be worse than the Great Depression. Why worse? Because 1929 was pretty much a huge bubble in stocks, but still led to 25% unemployment. Real estate still came down about 15-20%, but it was mostly, almost exclusively stock market. Why is this so important? At the time, you couldn't play with real estate like you could in 2005, 6, 7 in the US. You had 5-year mortgages, 50% down. I mean, you can't speculate on this, right? So real estate was not so impacted. Now, this time, 2008, it would be the banks. They're going to get screwed. But people still don't understand this. If the bank goes bankrupt and there is no bailout, that means that your money, let's say you didn't participate in the stock market bubble, in the real estate bubble, your savings are kaput. You see, this is why crypto is invented, because crypto solves the problem of counterparty risk. Particularly in Europe, there were banks being bailed in, not bailed out. If you guys don't understand what bail-in is, Google it. It's much worse than bailouts. People got their money frozen. All of a sudden, they quickly found out that their money was not really their money. So crypto comes along and Bitcoin comes along. You own your own coins. You are responsible for your fate. Nobody can take it from you as long as you keep it in your mind, blah, blah, blah. So it solves 3 things. It solves actually 2 things. Number 1, custody. Very important. So being outside the system, but having your assets with a custodian, like gold, for example, also poses another problem. You just need that custodian to stop being your friend. And good luck getting the gold when he has hundreds of men with guns pointed at you as you try to get your gold. Yeah? So that's number 1. Number 2, it created the concept of digital scarcity. You see, the problem with digital, and the good thing, is that it makes everything very affordable. Remember when people used to spend $2 an hour in the international phone calls? Fast forward 30 years and you have video calls, not even phone calls, video calls for free. Abundance created high value for people. However, not the great way to make money because all of this is for free. Satoshi found out how to create digital scarcity. That's why it's such an innovative feature. But that's not even the most important thing. So going back, real estate, banks are exposed, banks go bankrupt. Central banks are not your friends or not my friends. They are a central bank. They represent, they protect the banks. And they were looking at something worse than 2009, than 1929. So they decided to debase the currency a certain percentage per year, in which what that causes is that people that own assets become very, very wealthy, so it creates the wealth effect. Number two, those assets work as collateral, so the debts are more stable and they can be issued more. On the other hand, unfortunately, people who have salaries, who work paycheck for a paycheck without assets, they pretty much stagnate. But because the currency is getting debased, they are actually losing versus the people that own assets quite a lot. So that's why, ever since QE started in full force, you have an economy like this. The very wealthy with assets, about the top 20% of population, and the bottom 80% that own pretty much no assets and is stagnated, but because the other top is growing, the bottom 80 is getting worse comparatively. So central banks decided to debase their currency on average 8 to 10% per year. On top of that, you need to account for CPI, so which is the buying of goods inflation, right? If the government says it's 2%, then it's 4. So let's say the average inflation was 1.5, it was closer to 3. Okay, 10% debasement plus 3% CPI is 13%. So you need an asset that yields 13% or more for you to start getting ahead. 2 assets did that. Only 2, or 2 asset classes. Tech stocks and crypto. That's it. Now, why do they go up? Why are the S&P, for example, that you like, going up disproportional to the earnings? And then people say, oh, this is a bubble, it's about to pop. No, it's not a bubble. You see, the S&P or any stock or any crypto is priced in the currency. So because stocks are priced in dollars and dollars are getting debased, the denominator is getting lower, the price goes up. So even if stocks don't do anything new from what they're doing today, their share price will tend to increase because the currency is getting debased. That's it. Why does crypto perform better than commodities, for example? Because the real economy is not doing that well, and commodities are very linked to the real economy. Okay, why does crypto do better than stocks? Because stocks have overhead costs and have the incentive by the senior management to issue more shares as soon as the share price appreciates high enough. So if a share price goes up high enough, the incentive of management is to issue more shares. Crypto has defined rules, and crypto is a smaller bucket. When you're spreading liquidity into the planet, do you think it's easier to fill a bucket or a swimming pool? A bucket. That's it. That's why crypto goes up more than everything else. That's it. It's all the same trade. Stocks, gold, crypto, real estate, it's all the same trade. It's the debasement of currency. And these things go up more when the liquidity gets higher, and the liquidity gets higher in 4-year cycles, which is the government refinancing of debt cycle. Who needs interest rates low? The government. Why? They are the highest debtors on the planet. Now, here is where I distinguish myself from all the other YouTubers or the other people that look at this. They insult the central banks And I say, maybe they've done something right. It's very hard to say. People get shocked at me. What do you mean maybe people did something right? This is terrible. What the F are you talking about? People forget that 1929 was instrumental for a certain German person to be elected in 1933. That led to the Second World, you fill in the gap. What I'm trying to say is that these things have impacts that not even the wisest can see. You cannot account for the impact of all these things. Last time it led to a certain German person starting a Second World War. Well, I said it, right? So these things matter. So that was my assessment. But once again, this is my assessment. Can it be completely wrong? Maybe I'm looking at something completely wrong. This was the reason why, for example, in 2023, when everybody was predicting the depression and the stock market crash and all, I said, before the end of the year, you're gonna have new all-time highs before end of Q1 2024, you're gonna have all-time highs in the S&P, Dow Jones, and Nasdaq 100. The Russell I don't know, because the Russell is like the shit coins of stocks, and it's the one closest to the real economy, so I'm not gonna bet on that. But those three you're gonna see it, because the Fed is reducing liquidity, but the Treasury via deficits is pumping the liquidity to the moon. And the net liquidity was going higher. This is what people didn't pay attention. They thought stocks can only go up if interest rates are low. False. If the Treasury is spending, is creating more liquidity by basically fiscal deficits and budget deficits versus what the Fed is taking out of the market, then you can still have good performance in stocks. And look what happened. I made the argument back in 2023, the Fed took the risk out of the US stock market. And I said this, I said, that doesn't mean that stocks cannot go down. Just means that if you give it a little bit of time, as liquidity ramps up, we will be back at new all-time highs, even if you have a global pandemic, one conflict in Europe, one in the Middle East, high inflation, a president who doesn't know where he is, a candidate for president being indicted, ramping up of tensions with the European Mr. Vladimir, right, etc., 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 and we were making new all-time highs at the same time. So I hope that clears out. And based on that, I saw, okay, this is all the same trade. I'm going to go for crypto because it has the best chance to bring me from middle class to retirement. That's it. That was the only reason why I said, okay, I've made my analysis and I think crypto is the best place to be. And by the end of this year, we will see if I was right. So far, I already reached my first target. So my first target was living mortgage free if I sold all my crypto today. Check. Next target, financial independence, meaning retirement. Step 3 would be generation wealth. I mean, I would be very glad, don't get me wrong. But even with financial independence, I'm already going to be very happy. And guess what? Then I will de-risk quite a bit in my approach. Why? Because I don't need to chase the 100x, 500x coins anymore. I'm perfectly fine to go with Bitcoin, S&P, real estate. I'm very happy to do with it. Oh, by the way, about the debt issue, the only way to solve it is if AI leads into such productivity increases that basically you triple the GDP within the next 6-7 years, and then the debt doesn't look like a problem anymore. See what I mean? But I'm sure that governments will find a way to make it a problem. Then I wanted to give an example, and I will finish with this, I talk a lot about bottom signals. And sometimes they sound very theoretical, if you will. We just had a perfect example of one. The DOJ news came out. 30th of December, the DOJ was cleared to sell 69,000 Bitcoin. The news comes out 10, 11 days later to basically cause a big sell-off once again. On the 30th of December, a politician in Hong Kong was also pushing for Hong Kong, which is China by the way, to have its own Bitcoin strategic reserve. But most likely you haven't heard about that. See what I mean about a bottom signal? A top signal will be when you cannot find a negative news. You cannot find one single negative news. That's when you're closer to the top. And by the way, about all this, why I call this the cycle of PTSD, Bitcoin is up on the year. I just saw multiple videos of stock market crashes. Dow Jones, S&P, and the Nasdaq are down less than 2% since January 1st, and the Russell is down 2.3%, I think. This is the big crash. And with that, guys, thank you very much for your support. Catch you in the next one. Don't forget to like and subscribe.